This video is a little different to my usual ones, but stick with me, it's an important one. The goal of investing is to improve your quality of life over time, or at the very least, not make it worse. But does investing in Bitcoin actually achieve that, especially when there are so many other places you could put your money? Well, in this video, I'm going to break down what your money is really doing when you invest in stocks, real estate, gold, and, of course, Bitcoin. The results might surprise you, because they definitely surprised me. And hopefully, it'll open your eyes to what's really happening to your wealth, and how to position yourself in a system that's quietly designed to make you poorer over time. So, enough of the preamble, let's get into it. Since 2009, the money supply in the United States has tripled. In raw numbers, that's over $13 trillion in newly created capital now chasing the same pool of assets. And it's still growing at a compounding rate of 7 to 8% per year. If you only look at CPI figures, you might think inflation has been around 2 to 3% per year. But if you've been paying for housing, insurance, education, or just watching the Fed's balance sheet, you know it's been far, far higher than that. Realistically, once you factor in monetary expansion since 2009 and the reported inflation, you need to be growing your wealth by at least 10% per year just to stand still. So when we look at assets like Bitcoin, gold, or the stock market, we need to ask, did they actually beat this monetary debasement? To answer that, we're going to run all of our analysis starting from 2009. That's the year Bitcoin was first released, and also the point when governments began printing money at unprecedented levels following the great financial crisis. So let's say we started with $100,000 in cash back then. What would that be worth today, depending on where we invested it? First, if we simply left it in a bank account and accepted the interest available at the time, we'd end up with a return of just 23%. That means our final balance would be slightly over $120,000. Now, let's compare that to other asset classes. If we'd put the money into US real estate, our $100,000 property would now be worth around $220,000. If we invested in gold, it would be worth around $320,000. If we'd chosen the S&P 500, the pot would have grown to $580,000. And if we'd gone with the tech-heavy Nasdaq, it would now be worth over $1.3 million. On the surface, that looks fantastic, and that is the actual dollar amount you'd see in your account. But most people stop there and consider that a win. What they fail to factor in is inflation, or more specifically, monetary debasement over time. When we adjust for the actual US money printing rate, plus a very modest 2% inflation figure per year, we see a very different picture. You'd have lost 70% of your purchasing power sitting in cash, 46% in real estate, and 23% in gold. In fact, the only place you didn't lose real purchasing power was US equities. And among those, the Nasdaq stood out, tripling your purchasing power over that time frame. But what if you'd invested in Bitcoin instead? The numbers are frankly outrageous. Returns in the millions, even billions of percent. But of course, unless you were one of the earliest adopters, that's completely unrealistic. So let's zoom in and look at the past 5 years to make things fairer. If we now price Bitcoin relative to other major asset classes, here's what you find. Since 2020, Bitcoin has outperformed US housing by over 600%, gold by 500%, and even both of the major US stock indices by more than 400%. This is why many investors have made the transformational mindset shift by starting to measure wealth in Bitcoin rather than dollars. Because, as we've seen, it doesn't really matter if your dollar balance is going up over time if the currency itself is being printed into oblivion. You don't feel any richer, and that's exactly what most people are experiencing. Now, sure, it's easy to show Bitcoin's historical outperformance, but you still hear the same pushback that Bitcoin is too volatile. And that's true. Bitcoin has been one of the most volatile assets in financial history. But it's that same volatility that's delivered its outsized returns. And when you look at the trend today, Bitcoin's volatility is actually falling. It's now trending toward the same levels as the stock market and gold. So unless you're happy sitting in real estate, experiencing low volatility, but also guaranteed loss of purchasing power, Bitcoin starts to look more appealing. It now offers a similar volatility to equities, but with far greater upside potential. Now, that doesn't mean investing in Bitcoin is a no-brainer. It's definitely not for the faint-hearted. As you can see from the drawdown data, after every explosive move to its cycle peak, Bitcoin has suffered deep corrections, often 70% or more. While some argue those drawdowns will become less severe as Bitcoin matures, I think it's more realistic to expect this cycle to repeat again and again until proven otherwise. It's scary to watch your portfolio drop by that much, but so far every drawdown has been followed by many 1,000% moves to the upside in the years that follow. But how can we count on this happening again in the future? Well, if you're pricing your Bitcoin in dollars, and the dollar continues to be debased at an accelerating rate, then there's really only one direction the price can go over the long term. Because unlike fiat currencies, Bitcoin has a fixed supply. Only 21 million coins will ever exist. And right now it's being adopted faster than the internet was in the mid-1990s. So, what if you do hold some of these traditional assets like stocks, real estate, or gold, and you want to preserve your wealth by moving into Bitcoin? When's the right time to do that? One way is to measure Bitcoin's relative strength against those other assets. When the ratio charts are high, Bitcoin is outperforming everything else, which is probably not the best time to jump in. But when those charts are low, it's historically been a strong opportunity to rotate out of your equities or gold and build a larger Bitcoin position. It's not about certainty, it's about stacking probabilities in your favor. And even if you allocated only a modest 10% position to Bitcoin and left the rest in US equities, your returns would have been 37% higher per year. So when you zoom out, Bitcoin isn't just another investment, it's a monetary revolution playing out in real time. It's the first asset in human history with a verifiable fixed supply and no central authority. That alone gives it a unique position in a world where every other major asset is in some way tied to debt, credit, or currency manipulation. And in an era where trust in traditional systems is fading, that kind of integrity is becoming more valuable by the day. So to wrap things up, it's clear that monetary debasement is a very real force shaping our financial landscape. Since 2009, the money supply in the United States has tripled, which means you really need to be growing your wealth by at least 10% a year just to keep up with the loss in purchasing power. That's a tough benchmark for any investment to clear, and it completely changes the way we need to think about returns. When you adjust for inflation and the actual money printing going on behind the scenes, the picture looks quite different from what the headline numbers tell you. Most traditional assets like cash, real estate, and even gold have lost a significant chunk of their real value. The only major asset class that's managed to preserve or grow purchasing power over time has been US equities, especially the Nasdaq 100, which really stands out for its performance. And then there's Bitcoin. Over its entire history, Bitcoin has blown traditional assets out of the water, delivering returns that are on a completely different scale. It's been a fundamentally different kind of asset altogether, and many investors are starting to measure wealth in Bitcoin terms rather than dollars. In a world where money is constantly losing value, having an asset with a fixed supply and no central authority matters more than ever. If you're serious about Bitcoin analysis, my full custom indicator suite is now live, built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.